All right, ladies and gentlemen, I hope you had a wonderful weekend. It's about to be another wild week. We thought it was only going to be about the CPI and kind of play out like last week with the non-farms, but we are getting into the holidays and some things should slow down with positive seasonality. But now over the weekend, there was a couple of events, and we need to talk about the Europeans causing inflation. Now, before I get into any of that, we do have some drama over the weekend. I posted it on my Twitter, Real Cult News. I hope I see you there, and the long term. But if you did not hear about it, Syria has officially fallen. Bashar al-Assad is in Russia right now with his family. There's videos of people looting the central bank, walking out with money. Here is Bashar al-Assad's garage. They're at the presidential palace, and there is already a new leader of the resistance, Jolani. He is the one being declared as the leader. Now, this could have a lot of different effects. Do I think it's going to affect the market? I already tweeted. I said it probably won't for now, but Israel's already getting involved. They're taking territory. They're even doing airstrikes. This is now just another Middle Eastern conflict. It is going to be much more volatile out there, and even Joe Biden, he already is talking about assistance, and I think Donald Trump put out a statement saying, let them handle it. So we'll see how that factors into things, but definitely in the theme of last week, there was a lot of craziness, and now leading into this week, we got a lot of data. There's a lot of things overseas, and now you could throw that into the mix. So we got a couple of other things. I have the plays, I have the keys, all of that. We actually have a lot of cool, pretty pictures. So what I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, before we talk about any Europeans causing inflation, let's go a little broad and understand where you're at right now on the month. It's like the middle of December. That's where we're approaching. I know it seems like it just started, but believe it or not, last week, that was supposed to be the slow time, if anything. So from here on out, the seasonality is good. And if you aren't aware, a lot of people on Wall Street, they are already getting to leave. I think after this week, I'm not even going to do any watch lists. Things are going to start slowing down. If anything, a lot of people are already taking off. That's why I'm saying here, CPI, kind of how the main theme was non-farms last week. We're going to do that little dance here again this week, but then now, overseas economics, Europe and China, as well as conflict all around the world, or even South Korea to Syria, these will be your final drivers for the end of the year. We're waiting till the inauguration. We're waiting for some other milestones as well, too, but for now, until we get into middle of January, there's not much that should be moving us. The final thing will be the data and Powell, but after that, all financial markets are going to be doing is following this narrative and then responding to things like China and Europe and then whatever else is going on. But now here is the problem. If you notice last week, there was a lot of crazy things, from South Korea martial law and a potential coup down to earthquakes and just all sorts. Even Roaring Kitty, man, last week was absolutely insane, but it even just highlighted how in the middle of all of that, the dollar got stronger, U.S. stocks got stronger. It's not like other countries having negative things. It doesn't make us freak out right now because it just further strengthens inflow to U.S. stocks by the dollar, and then this is that exceptionalist trade. So it's very interesting as we move forward. You would need like a real big global calamity or something domestic with the United States to slow down. Otherwise, other things around the world, if they get bad, it has only benefited us for now. So keep that in mind, and now we'll talk a little bit about the Europeans. But before I get to that, I do want you to realize this week is CPI, and what has been the big debate over the last month and a half since the election, and it is whether or not inflation is going to come back. Now, remember, we had the Michigan Consumer Sentiment on Friday. Here is a nice little chart from that, and I think this highlights everything. You've heard me on all of these takes. You've heard all of this stuff going back and forth, and we've talked about it a lot, but based on the University of Michigan Consumer Sentiment, the red line is Republicans, the blue line is Democrats, the purple line is the the independents. And what you could see here is after the election, you have Republicans saying, well, I'm telling you, we're going to bring down inflation. That's it. It's done. It's over. And then the blue line, the Democrats, Donald Trump tariff immigration going to bring back the inflation. And then the independents are just on Twitter and they're just like, yeah, man, nothing is really is he even in office yet? So I think this is a really cool chart. I think it highlights a lot, but especially with the drama, and you see it in financial markets, you see it in the bond markets and all of that. That's why after the CPI this week and then what it leads into the Fed, this is all going to be important. So watch out for that. Keep all of that in mind. And now this is where we got to talk about the Europeans. Like I'm saying, we are going to have some data. You got like a couple of manufacturing sets and then even PPI beyond the CPI this week. And the CPI comes in early, so you don't have to wait till the end of the week like the jobs report. But other than that, though, if nothing gets too crazy, the only other drivers are going to be Europe and China for the end of the year. Now, here's the problem. You've been hearing about France and even hearing about Germany as well not doing good. But here is the problem is, and it relates to this whole inflation thing, is that, yeah, U.S. exceptionalist is good. Even people aren't getting too worried about the tariffs. But if you have these budget problems, big spending, easing policy, and even the Europeans are cutting, even Powell has mentioned that, and these guys are like, nah, we're only going to pursue easy policy, that is going to guarantee some sort of inflation in the midterm. If you're not getting it, yeah, even if the U.S. and let's say Donald Trump does everything perfectly, at the very least, if the Europeans keep on this strategy of easing and cutting and blowing out their budgets, unfortunately, that's going to cause an inflationary pressure in that part of the world, and then that could start to spread. So that's something we're going to watch for this week because we need to see if this chills down or not. We'll see even after the CPI, and as the market starts to get into slow mode, I think if we get any developments out of Europe, this could be a very big driver. But at the very least, right now, Bank of America and some other people on Wall Street, if the Europeans keep this strategy, they are expecting some level of inflation being injected from their policy measures. So watch out for that. I think that's going to be really important. And then the other thing this week, the China Economic Work Conference. It's this conference. They're going to bring together all the officials, but they're going to talk about economic targets. And people are always, like every meeting, they're expecting that this is going to have some stimulus, and then you play the game of underwhelmed or overwhelmed. So remember, China went crazy not too long ago. We said it was going to be choppy, and it for sure has already came back. So people are still waiting on the next step, and even then, tying it into Europe, it's like, hey, if coming into the next couple of years, if Europe can be a guaranteed source of inflation, if they keep going down a path, you guys got to realize it's kind of a gray swan. I believe Nomura, the bank, they're the one who brought this up over the weekend, and they even said that China's stimulus failing, that could be a gray swan, almost a black swan, where you got to realize if all of this stimulus doesn't work the next 4 years and the tariffs and things do get bad and China adds more of a drag, that is not going to be good for a lot of things. So we'll see where that all plays out, but that's why I'm saying keep your eyes out on these broader narratives. And then finally, the main narrative is all the same, man. And that's why I'm saying the Trump trade, election, the dollar, before you know it, you're about to repeat the holiday cycle. After this week, it'll start slowing down, or pretty much after Powell, and then it'll go back to the computers. Don't blow up your account. And then before you know it, everybody getting ready for next year. Now, you do have Japan. That's going to be on the 13th, I believe. So that will be another event. Let's tie that into the overseas stuff. But other than that, the one thing I want you to keep in mind, if it's not something related to Japan or mainly Powell on December 18th, the inauguration is still that expected inflection date. Once we start getting policy and go from riding the hype of getting into office to like, okay, now you're in office, what are you going to do? Then we're going to see where things are at. So in the meantime, no one's really expected anything to change. We'll see if it does, and get ready. But now, let us get into the plays. So right off the bat, baby, I got to start with the Teslas. They have been going insane. So it's one thing about the post-election trade, and we've talked about this. Literally, Tesla was like one of the major, bigger winners, but now they're hitting that breakout level. They even ran up a little bit after hours on Friday. They're getting to that 390. I think it's only been a handful of times post this split where Tesla has been at this level. So I think, again, keeping the January inauguration timeline in effect, I think they could either keep going here or not. The best part is we already got that play last week. week. I thought it was a gamble. I thought it was going to backfire. Ended up working. Already made them free. But now, especially again, if things are slow, and even after this week, as we get into slower places or slower weeks, the companies that are already having this momentum, they may just do their thing. So going to be watching out for Tesla. That is play number 1. Then play number 2. Oh my gosh, GME. And why? Because, again, things are slow, or at least that's what I'm expecting. I do think last week was a lot slower after the holiday, even though there's still some time before the holidays. It does seem like it's just so simple and cut out with these narratives. Nothing's really changing. Bad negative events overseas only benefit us. I'm not really expecting too much. Maybe crypto and all that gets some more action. So with all that being said, GME, remember the Roaring Kitty picture, the dream interpretation, that was last week, the Unity. I'm glad we made it free and kept it small. Those already came down. But after that little Thursday, Friday, we didn't really hear much. So keep watch on it if things are slow. I don't have a play on GME, only those free Unities. So we will see where that takes us. But that is play number 2. And then finally, play number 3, baby, ARK. This is long duration. Honestly, don't forget about the biotechs too. That's a trade we brought up out of all of the Trump trades over the last month or two, and that's the only one that hasn't hit. But ARK, remember ARK, KRE, Beto, all of those ended up working out, and I double dipped on ARK, and now that double dip was negative, and then ARK started going crazy, and now it's green. I kept it on Friday, but I was talking about this, and I just said it's simple. You either roll over and go for a triple dip, but all the contracts are up, or you take profits on that double dip simply because ARK has already gone crazy, and now if it has one slow day from here, contracts out of the money and expire this week, you're probably going to lose on that. So if there is volatility, though, I think there could be an opportunity on ARK, meaning if it doesn't just go straight up and does have slowdown, big drop, big run up there, and continues to break out but has big pullbacks ahead of that, those contracts with not that much time, they're really weak, and that's why I'm nervous about mine. But if we could monetize those, see where it plays out with the moves this week. If those contracts get cheap again, though, there could be that opportunity. So watch out for that. We'll see where that takes us, but that is play number 3. And then finally, the only play I made, man, this one was bittersweet. I held this 2 earnings ago. This is why you need to watch the earnings pricing video we put out this year. Again, I think a lot of you made a lot of money off that strategy. 2 standard deviations has been clutch this year, and this was one of those old plays. I bought it for 44 cents. It went up over 1,000% after the earnings. I sold out at $4.50. This contract kept going. It closed at $10. So you would have had like 2,000 or 2,200%. So not bad, though, but I finally got rid of that. Other than that, though, I made those Teslas free. They went up like 50%. So I sold 3 out of 5 of them. So I got 2 of them for free. Like I said, those Unities came down. And other than that, chilling with the bond plays. The TLT plays are green. I'm looking for a little bit more to make them free. Again, I went from sell the rip. I still haven't done it yet. Things have gotten a little better, but I am feeling a little more comfortable with the bonds. But eventually, I mean, it's been pretty good the last week and a half of bonds. So just be on the lookout. It's either bond seasonality. It should be positive, but it has had a lot of good rallies. So if it calms down, maybe this week is the sell the rip. We'll find out, but going to keep my eye out on that play. Other than that, though, I'm going to watch where some of those post earnings take us. We'll see anything from around the world. And then before you know it, man, it's going to be the holidays. It's going to be, it's going to be Christmas. I had to find them. Oh, yeah, so enjoy it. Drink that water. Stay hydrated, healthy, all that good stuff. But Chad, that is your watch list, ladies and gentlemen. Make sure hydrated, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, start small with any task so you can build it to the utmost of what it needs to be. But don't start with forgiving the Gestapo, baby. I don't know if they know, but I love you, Chad. Drink that water, stay hydrated, healthy, all that good stuff. I'll see you in the morning, and or not.